Hey, this is Jack from Alpha Charts with a long view video. Today is April 28th, 2023. It's end of the month, end of the week, end of the day. So we're going to look at these charts. They are monthly charts, and we are going to have just a 50-month moving average on the chart, which is this blue line right here. I am using DeepVue as my charting software today. So deepvue.com if you're interested in that. And I'll link to that below if you want to. And what else? And let's get started. Before we do, though, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, we're going to go through the indexes, the sectors, and then the top 20 market cap stocks to get a feel of what the market is actually doing. All right. So first off, Dow Jones, the 50-month, right? If we just traded on the 50-month and bought every time it touched it, we would have done very, very good. This is from the 08-09 financial crisis, but really this is held basically the entire way up. Here's COVID, came right back, right? So basically being long above the 50-month makes sense, right? So Dow Jones looks good. Got a little flag going on here. As long as we stay above that 50-month, I still think we're in probably a bullish scenario. Let's go to the SPY next. Here is the SPY, and get rid of some of this old drawings. Right. There you go. All right. So here's the SPY, and when you look at the monthly, I'll get rid of that too for now. When you look at the monthly, we it looks a lot like the Dow, right? I mean, you have this kind of right there. And the question is this a breakout of this monthly kind of pullback and flag? Once again, the 50-month moving average has been a great spot to buy, right? Signs of bottoms are at this 50-month. So right now, again, it's got a bullish look. Lower volume on the monthly, whatever that means, but nice little look, potential breakout on that little flag. That's nice. Looking at the Qs, and there's your 50-month right there, and it doesn't even like to touch it. It just did recently, right? Just did recently. And again, if we use this as kind of like our breakout, right? It already broke out. Maybe you want to say this is it right there. That could be a better trend line. But either way, it's above this particular trend line and above the 50-month. Again, that's a positive. This lower volume is kind of interesting. Doesn't mean, it doesn't have to mean anything, but it's kind of interesting. I'm not sure if that indicates that, institutional involvement isn't as involved as maybe we'd like it to be. But overall, I think it's only price pays, as Brian Shannon says. So let's go with that. We'll go to the mid caps next. And mid caps, again, tag the 50-month, right? Multiple times. Every time it does, it rebounds. It fell through, came back, tagged it again. This was the first month that we've seen that was down, right? So all the other indexes so far have been higher. The mid caps are the first one down. Now, the other ones are also cap weighted. This is an equal weighted index. So that tells you a little something right there. Again, lower volume, and it has not broken out yet. So the other ones look a little bit more bullish on the cap weighted side. It goes to those mega cap names probably carrying a bunch of them, right? This one not so much. So that's interesting. And look at IWM just to see what that looks like. And IWM below the 50-month and kind of living below the 50-month in a lot of ways, right? So that's not necessarily a good thing. And that's, I think, a take notice thing, right? So you see how it kind of, just like everything else, respected it in a very similar fashion. But now it's starting to live below the 50-month, 2 months in a row now. And 50-month is starting to kind of get a little flattish, really. So that's kind of interesting. That's a little worrisome, right? So the other ones, mid caps, let's see, the mid caps going back. I'd rather do it through here. It just makes my life easier. Mid caps respected it, right? Dow Jones respected it. Qs respected it, right? Small caps disrespect right there. So that's taking note of definitely the weakest looking of the index charts, and something that, again, I don't like this at all. This is a little worrisome. Let's look and see what bonds have to say. Bonds, I mean, to me, this looks like a bear flag, right? Looks like bonds are going lower. What does that mean? It means interest rates are probably going higher, right? If this is a bear flag, right? And it may not be, but right now it very well could be. And you see the selling pressure here, 50-month over here, right? To me, it looks like bonds are going lower. That's it. That looks like a bear flag. Now, if it doesn't, and it surprises to the upside, gets above, 77 and a quarter-ish, maybe even 77.50-ish, gets above there, $78, that could change my mind some, but overall, this looks pretty rough, and it's been rough, right? I mean, this was a peak in 2020, and bonds have been falling ever since. So bonds not looking great. All right, so let's get into the sectors, and I'm just going to go via just go right down here, right? So here's XLB. As materials, again, has not taken out this high yet. Down month, inside month, not much to say about this, right? Not this uber bullish looking at all. Let's look at the XLC. So XLC is below the 50-month, which is just starting to show up on the chart right over here. But strong month, up 3.5% or 3.3%. Following up on this, and it's been really strong this year. Nice. But as you can see, this 50-month has been resistance. So let's see how much more upside is left in this, above the 50-month. And I think we could get pretty bullish, the XLC, right? Again, but not until it does. Looking at energy, here's the energy going back to 2008. And this has been a super important area. It was up 2.8% on the month, tiny volume comparatively. And we'll see if it could get above, $93, $94. XLE could be leading the next wave, right? Maybe there's some kind of, bull flag in here, right? Energy leading, that sounds pretty good to me. All right, financials. Now, financials, this area has been important since there was a financial ETF, right? Here we go. Resistance became support, became resistance. Again, here's your great financial crisis and resistance. And the question is, I'm going to take this off, was this a bull, bear flag here? That was my question on the short time frame. On the longer time frames, there's your 50-month. And look at this. It's respecting the 50-month. So I think 31.47, if it gets below 31.47, $30 is going to get retested. And if that breaks, then things get really bad. Right now, we're not there. I had a nice little up month, inside month. So we'll continue to watch that. That 50-month, though, continues to be relevant. Industrials, again, you see the sellers are coming in every time it tries to push higher. Can't take out these all-time highs yet. I'm not really doing anything wrong. It was down 1.18 on the month. Inside month again. A lot of inside months. XLK, again, strong look. Bounced off the 50-month. Nice there. Was basically break even for the month, but it closed near the highs. All right, so technology looked okay. Again, has not taken out this high yet. And I think this 50-month is very, very important in this as well. Staples. Staples is the closest to a closing all-time highs. It looks really good and maybe starting to lead in some respects, right? Nice, strong 3.64 month, which followed 3.72 month. So this looks really good. Nice little consolidation, and really right at all-time highs. Best looking name out there, right? Staples. Real estate looks like crap. XLRE below the 50-month. Utilities bounced off the 50-month once again, was up almost 2%. But if interest rates are going higher, chances are utilities are going lower. And healthcare. Look at healthcare just kind of biding time, moving sideways, right? Not that far from all-time highs. So healthcare is looking pretty good overall, right? That's not bad at all. And consumer discretionaries living below the 50-month, not what I want to see there. Maybe there's pockets of, the shoes were doing pretty good for a while, Crocs on, but Crocs didn't do, had earnings and just didn't do well. Anyway, point is XOY consumer discretionaries under the 50-month, not what you want to see. So on this list, really the staples by far look the best, right? And healthcare looked pretty good as well, right? Those two are the ones that, if we're going to focus on something, it looks pretty good. Also, look at this up down volume on the month 209, right? And 2.58. Well, they look the best on the charts. And when you look at the up down volume, right? Then you're seeing why, right? You're seeing people are choosing them. All right. So there is the sectors. Let's go into the specific. Now, before you started this, we saw that the cap weighted ETFs indexes looked way better than the ones that were equal weighted. So my guess is these top tier names should start to look pretty good. Let's find out, right? First one's Apple. Apple is trying to break out here, right? A break of this is very, very bullish, and everyone's 401k would be happy. Again, the 50-month has been very important. Microsoft, similar enough, bounced off the 50-month, and look at that, how it just rode it, right? This 50-month is really something to take notice of. Here's Google. And there's your 50-month, and it's been going back and forth and is back above the 50-month. So again, looking pretty good. Not as good as Apple, though, right? Apple looks better. Next up will be Amazon. And they had earnings, which people did not like, living under the 50-month. So by far now, Amazon looks like the weakest of, again, it's consumer discretionary, right? Amazon's consumer discretionary. It's not really a tech stock. The first three, Apple, Microsoft, Google, tech stocks for sure. Even though some people can make the argument Apple is a consumer discretionary, but it's in the tech sector. Amazon, not looking good. NVIDIA, nice, strong, it was even on the month, but it's had a lot of nice, strong months and not that far from all-time highs above the 50-month. That looks good, right? Berkshire B, Berkshire Hathaway B right there. Looks good, right? Above the 50, doing great. Next up, Tesla, consumer discretionary name, goes below the 50. See how this is working out, right? This is what we expect. Meta Communications. Look at how strong that's been. Oof. Super strong. We'll just get rid of that for now. Back above the 50-month, right? Again, it's come a long way in just 2, 4, 6 months, but that's very, very strong. V bottom right there. I would expect some backing and filling, and then maybe the move higher, but looks better. One interesting thing is notice how the volume is tailing off. It's kind of interesting. Next up, healthcare. Now, healthcare's been looking pretty good. Johnson & Johnson overall. Yeah, it held the 50-month, right? Moving higher. Looks good. Visa. That's what I wanted. Where you have Visa? There you are. Visa. Near all-time highs, respected the 50-month. Looks great. Taiwan Semiconductors. Still, even though it had a tough month, down almost 10%, especially with fears of whatever China may or may not be doing, it held the 50-month. That's something, right? Again, not the strongest look. NVIDIA looked way better. But there you go. XOM. So XOM is right at all-time highs, right? And I don't know what this was on this day back in 2008, if that's just some kind of remnant or something. Looks like it, but super strong. I would even say the breakout was back here, right? Something like that. And ExxonMobil going higher, right? Leading the energy. Remember, XLE hadn't broken out yet, where XOM did. You want to be in the leading name. XOM is leading. If XLE is going to break out, we want to be in some of the XOM, right? United Healthcare. I mean, just a beast. I hate health insurances, but overall, but this one makes money. You know, it makes money. Somehow they always make money, right? Right. The breakout was back here. Look at this. Oh, so good. Right. You know, by in 2013 at $65, you've done pretty good. What else is next? Walmart, right? Consumer discretionary. And it is near all-time highs, right? I guess it'd be discretionary, right? Yeah, not staples, discretionary. Walmart. What else? JP Morgan, right? Banks are took on the chin, but it's above the 50 week, a 50 month. That's pretty good. MasterCard. Almost near all-time highs. What a juggernaut, right? Oh, if you would have bought this in 2010, you'd be retired. Procter and Gamble, right at all-time highs. Look at that. Very nice. Above 165, and this thing could blast. What else? Lilly, big drug and Mounjaro out there. And look at that, up 15% on the month, right? Just a little flag and pulled back. And again, hasn't even touched that 50-month since 2018. Just an absolute beast going from 80, basically going, 5x from 2018. Crazy. CVX, Chevron, again, broke out of this 130 area, kind of retested it right here in 2022, last year, and now just kind of consolidating. Looks really good. So big cap oil gas names looking really, really good. And the last one on my list tonight is Home Depot, which has tagged that 50-month a few times now, but it's still above it. Just a monster of a name, still above it. And so that's positive. So my thoughts. First off, by far the cap weighted indexes are looking way better than the equal weighted indexes. Sorry about that. Cap weighted looking way better than equal weighted by a lot. And when we looked at the different individual sectors, we saw some technology was looking okay. We had technology. Technology was looking okay, but really we were looking at healthcare as really strong. We also looked at staples really strong. Not the most bullish sectors to be the strongest in the markets. Like they all have to participate, but not the strongest sectors to to lead the market is what it is. And what else? And then within that, again, we saw the cap weight stuff like Apple, looking absolutely amazing. Microsoft looked pretty good, right? That was pretty good. Google, not quite as good as the other ones, right? And then Amazon much worse, right? So of those bigger cap names, and there's your Nvidia again, looks pretty good. So of the gigantic cap names, mega caps, whatever you want to call them, those are the ones that looked good: Apple, Microsoft, Google, Nvidia. Amazon, less good. Again, anything consumer discretionary like Tesla, less good, right? Less good. Anything below the 50-month moving average, less good. And so that's what we got there. This is the monthly review. This is really, really important. This tells me maybe the bulls aren't quite ready yet, right? If I'm seeing XLP leading, if I'm seeing healthcare leading, if I'm seeing, XLK, which again is okay, is doing a little bit better, but still not, was down on the month, not leading, that tells me something, right? Industrials trying, but not leading, right? They were down on the month, right? Energy Still hasn't broken out. Those are all problems. Maybe we're going to be in for another bull run coming up soon. And if we are, we would see the rotation back into technology. We'll see it, maybe some energy. We'll see it in consumer discretionaries, right? Just not quite seeing that yet. We're seeing actually the opposite. So, all right, y'all. Good luck. Enjoy. Again, DeepVue for the charting if you're interested. At deepvue.com, whatever. I'll talk to you guys later. Bye.